Hey, what's up guys? Hope you all are doing awesome today. My name's Frank and we're going to be going over why I sold Delta Airlines today and what I will be buying instead. So before we get into the video, I just want to say I hope this is out sometime Saturday morning. Right now it's about 6:30 on Friday, 6:30 in the evening that is. So I gotta make the video and edit it and everything, so hopefully it'll be out sometime Saturday morning, but if not, I apologize. I've just been busy with schoolwork this week. I had an exam today, so I was doing a lot of studying for that. So hopefully I can get it out by tomorrow, and if not, well, that's what it is. Okay, so before we get into why I sold it, we should get into why I bought it. And I bought it right around here, around March 9th, I think. And my average cost is around $43.56, and so as you can see, it dropped pretty much immediately right after that. And basically the reason I bought it is because I thought, oh, this pandemic is hitting and the market's dropped a bunch, the airlines are getting hit pretty hard, and I think it's still a good business, so I'll buy it and get it at a good discount and get my dividends, and then once the market rebounds, I'll be making some profit as well, some capital gains that is. And as you can see, that's clearly not the case. It dropped down into the 20s, low 20s, and it was just kind of sitting there for a while. It did spike up to around 37 once, I think, and then recently I sold it right at 35.01, so I had a loss about $8.50, but I'll get into why I did that in a second. So we're just going to look at some of their financials. So this is the 10K report from Q2 2020. And so as you can see, they have about 18.9 billion in current assets and about 20.2 billion in current liabilities. So right off the bat, that's a big red flag, because that basically means they don't have enough assets. They won't receive enough assets in the next year to pay all the debts that they owe in the next year. So that's not good at all. So moving along here in their income statement, we can see in Q2 they had 1.5 billion in revenue, which was down 88% from 12.5 billion last year. So that seems pretty bad to me. And then their operating loss was almost 5 billion this quarter, and that includes a 1.3 billion approximately that they received from the CARES Act. It's basically a grant. And I also read online, I was reading a bit, and I read that they overall are going to receive over 5 billion, which includes part of it is a loan, but most of that is just a grant or stimulus. So they received all that and they still had a pretty large loss, so that's not really something you want to see. And their EPS was about -$9 per share, which is pretty bad compared to their around $2 last year, Q2. So that's not looking too great. And also, pretty much a few days after I bought it, they suspended the dividend, so that's pretty bad to see as well. So if we're looking here, I bought around $43.50 and I sold around 35, so that was about a 20% loss or so, but I'm okay with that. The outlook, it's going to be a while, I think, before they're able to reinstate the dividend, like a year or two, and I think it's going to be a year or two before the stock really rebounds to anywhere where it was before the pandemic hit. So now that I've sold off Delta, you might be wondering what I'm going to buy instead, and I'm going to be buying Apple, hopefully. I want to start a position. I currently don't have any stock in Apple, and if it gets to around $100, maybe a little bit below, right now it's about 106, so if it gets below 100, I feel really good about that price. I personally think that the market as a whole is going to go down a bit more, maybe like 5 or 10% more at least. So if that happens, I think Apple will go down with it, and I could get it around 100 or maybe a little bit below. I've been watching some videos from Alex at Blood Phantom 81 recently, so he has some videos sort of on technical analysis and where the market's going, and like he draws a bunch of lines on the charts and it looks fancy, and he talks about supports and stuff that most of the time I don't look at, but it's interesting to think about that stuff every once in a while. So basically what he's sort of saying, and I think I agree with that, is that he thinks the market's going to go down some more before it has a big rally. So if that's the case, I'll definitely be adding Apple, and if it goes down as well, I'll definitely be adding more Microsoft. Right now it's around 200. I would love it at like 175 or maybe lower. That would be great. So if that happens, I'll buy some Microsoft, and also some great high quality companies like Caterpillar, Travelers, Procter & Gamble. If the whole market falls some, I would definitely be adding to those, because those are some of my highest quality companies that are just so close to all-time highs. I really just don't want to be buying there, or it's just harder for me to buy there, you know. But if the markets don't fall as much as maybe I think, or I don't know, if they don't fall as much, then I might be buying some JP Morgan as well, because they're still really beat up from the pandemic and the crash there. They haven't really recovered as much as some of the tech companies and stuff like that. So they're around $100 right now, and I really like that price. I've recently started a position in them. So if they fall even more, I'll definitely be buying some more as well. So yeah, that's what I'm looking to buy. Sort of an assortment, but basically I'm thinking the markets are gonna go down a little bit. I really don't have any technical skills in predicting that or track record at all, but that's just sort of my opinion. Obviously I'm definitely not a financial advisor, so definitely don't just sell everything and then hope it goes down and then buy back in, because that's, if you do that, then I think there's a larger chance that it won't go down just because you thought it would. So maybe that doesn't make sense, but that's how things seem to work for me. So today's quote is from Israel Moore Ayavor. He's an inspirational speaker, a writer, and a blogger from Togo. And he said, "It's better to be slow and careful in the right direction than to be fast and careless on the wrong path." And I think this is really important, because a lot of times I just get excited about something and I just want to go. And sometimes it's better to have a little bit of patience and slow down and think about what you're doing, and then plan out some steps and then work towards that. And then once you have your plan, then you can go and work hard. But you got to have a plan in place in order to be successful. So that's all I have for you today. Make sure to go check out Alex at BloodPhantom81 and show him support. And if you want to support me as well, you can just drop a like and subscribe and comment any questions you might have or ideas you might have for videos that I could do. So again, just thanks for watching, and I'll see you next time.